Hello and welcome back to Lipper's Fund Flows Insight Report. I'm Jeff Turnahoy. For the week ended April 9th, 2014, long-term mutual funds had inflows this week, as did ETFs. Let's take a look at our leaderboard and see where the activity was. Starting off at the top, for mutual funds, equities enjoyed $3.1 billion of inflows this week, followed by taxable bond funds, slightly less, $2.9 billion. Municipal debt funds also had inflows, about $171 million this week, and money market funds had outflows of $11.2 billion. Well, it's kind of a sour, kind of a lackluster week for equity markets as we saw continuing sell-offs in biotechnology firms. Let's take a look at equity funds and see how they did. As mentioned, about $3.1 billion in inflows this week. This came when the market dropped about 91 basis points. It wasn't a terrible week, but it certainly had this sort of sour feeling, I guess. Tech and biotech continue to sell off. The NASDAQ was particularly soft. Multi-cap value funds enjoyed the best inflows of all types this week. They had $667 million in inflows, and maybe investors were starting to look a little quizzically at equity markets as they allocated about $356 million to alternative long-short funds, perhaps as a means of mitigating any further losses in their portfolio as things got a little sideways this week. Well, let's turn our attention now to equity ETFs. They had a banner week this year with about $5.8 billion in net inflows. They were led by the behemoth SPY, the Spider S&P 500 ETF, with $2.9 billion in inflows, and that wasn't trailed too far by the EEM, the MSCI Emerging Markets ETF, with $2.1 billion in net inflows. Sort of a risk-on attitude among equity ETFs, but we saw also a lot of withdrawals from small cap and technology names, so not everybody was thrilled with equity this week. Again, somebody had to be selling all those biotechs. The next group to take a look at is taxable bond funds. Again, with $2.1 billion in inflows this week, it was a pretty good week. It's another almost $1 billion better than what we saw last week. Flows have started to pick up a little bit as the Treasury has remained 10-year Treasury note has remained range-bound between about 250 and 270 basis points. High-yield funds were the week's best with $437 million in inflows, and core plus bond funds weren't too far behind. They had inflows of about $335 million. U.S. government funds trailed significantly. They had outflows this week of about $165 million. Well, bond ETFs also enjoyed inflows this week, although fairly light activity overall. We got mixed signals here again. We saw on the one hand certain Treasury products with inflows, while at the other end, TIPS, which are another Treasury product, had outflows, so it wasn't a real clear decision by the investor community in the aggregate as to what's going on among taxable bond ETFs and where they want to put their money to work. Next group to take a look at is municipal debt funds. They had inflows this week of $171 million, starting to erase a little bit of the outflows from the prior 2 weeks. Performance was up this week. That probably got investors a little more excited to be in municipal debt funds. Again, Puerto Rico's fiscal situation has been shored up a little bit with its recent bond offering. I think in the short run that'll ease some concerns over what's going on with the island's finances. High yield muni funds were the week's best recipient of inflows. They took in about $286 million. The final group to look at is money market funds. Again, they had outflows this week of about $11.2 billion, fairly moderate outflows for this group. Retail and institutional alike both withdrew money. Retail investors about $2.9 billion in outflows. Institutional investors removed $8.3 billion. Well, that'll do it for this week's flows and analysis. Join us next week where we'll discuss what's gone on in the last several days then, or join us online at lipperusfundflows.com for more up-to-date information. I'm Jeff Turnahoy. Thanks for watching.